Jai Hind friends. If you are new to this channel, then please hit the subscribe button so that whenever a new video is uploaded, you can get the notification. And if you like the video, then please hit the like button. This will keep motivating me to make these videos. So let's start with the investor first. So investor says that he's a retired army colonel. So first of all, Jai Hind sir. And he mentioned that he invests 30 to 50k per month in long-term portfolio, and he is currently 60 plus, but he believes in being sensibly aggressive, which also makes sense because he's from the army. And he says that he wants to make minimum 1 crore in the market by the time he's 70. His current portfolio size is around 10 lakh rupees, and which he has reached in almost 2 years. And he's looking for our guidance how he can achieve his goal. And he also mentions that he intend to invest 20 lakh in next 2 years. So let's start with the review, and then we'll try to answer the questions that Mr. Colonel has mentioned. So total invested amount is 10 lakh 38,000. Market value is 10 lakh 34,000. Currently there is a loss of 3,700. So first company is Ace, quantity is 12, invested amount is 4,300, and currently there is a profit of 156 rupees. So let's check this company. So here you can see that this company deals in contract business of manpower recruitment for government, semi-government organization by processing online, offline application, conduction of examination, and processing of examination results. And if you look at the clients, its clients are mostly government and semi-government organization. You can see ONGC, Indian Oil, Coal India, HAL, NBCC, NTPC, Power Grids, and etc. And here you can see the market cap of the company. Market cap is very small. It's a micro cap company with a market cap of only 42 crores. And now I'm at the yearly result for this company, and let's keep an eye on the operating profit. So operating profit in 2011 was 0.6, then it dipped to 0.46, then it increased to 1.11, then 1.10, then 2, then 3, then again 3, then again a dip, then again a dip, then it increased again, and then in 2021 again there was a dip, and in 2022 again it has increased compared to the last year. So it's a micro cap company, and the profit also we have seen it is very fluctuating. So according to me, it's a okay company. If you want to keep in your portfolio, you can keep it because you have invested very small amount, which is absolutely correct. In micro caps, which are very small, we need to invest only small quantity. Next company is Bajaj Finance. Quantity is 12, invested amount is 76,000. This is a good company. This is a leader from the NBFC sector, and this is also continuously growing its profit and revenue. In the NBFC sector, this company has the lowest NPAs. So I think in my opinion, you can continue with this company. In case if you want, you can also add more shares of this company. When I'm making this video, the company is currently trading at around 5,500. If you want, you can add at 5,500 also. Next company is Balkrishna Industry. Quantity is 21 and invested amount is 42,000. This also is a good company from the tire sector. It is a leader in the tire industry. A lot of people think that in tire sector, MRF is the biggest company, but that is not true. This is the company which is the leader in tire sector, and this company has also provided better return than MRF. So in my opinion, I think you can continue with this company also. This company also can provide you good return in the period of 5 to 10 years. Next company is Deepak Nitrate. Quantity is 38, invested amount is 76,000. This also is a leader in its segment, which is the sodium nitrate segment. It has a market share of over 70% in the sodium nitrate business. This also is a good company from the chemical sector. It has provided very good returns to its shareholder, and being a leader in its segment, I think it can continue to do that in the next coming years also. So you should continue with this company also. Next company is Divi's Lab. Quantity is 10, invested amount is 31,000. This also is a leader company from the pharmaceutical industry. It is in the business of manufacturing APIs, which is active pharmaceutical ingredients, and currently API segment is being dominated by China, and gradually the business is shifting from China to India, and because of that, this company I think can benefit and can continue to do well in the next 5 to 10 years. So with this also I think you can continue. This is providing a very good discount from its top. So if you have conviction on this company, you can also think of adding more share of this company. Next company is Finolex Cable. Quantity is 21, invested amount is 11,000. So this company, as the name suggests, is in the business of wires and cables, and now I'm at the return profile of this company, and you can see the profit growth of this company. The 5-year profit growth has been just 8%, 3-year 14%, and in the 12 trailing month it has been just 2%. And the sales growth also in 5-year, 3-year period has not been very great. It's in single digit. Only in the last 12 trailing month it is showing an increase in the sales, which is 27%. Return on equity is okay, and if I look at the profit CAGR, 10-year is still fine, 5-year is just 5%, 3 years and 1 year CAGR is much better. So if I were you, and if I had to select a company from the wires and cable sector, instead of Finolex cables, I would have gone with Polycab, because Polycab is the market leader in this segment, and its profit and sales are increasing at a much faster rate and a much consistent rate. Next company you have is Fluorochemical from the chemical sector. Quantity is 10, investor amount is 28,000. This is a okay company. If you want, you can continue with this company. The last quarterly results were also very good, and from the last few quarters the company is showing very good progress in terms of its sales and profit. So if you want, you can continue with this company. Next company is HDFC Bank. Quantity is 24, invested amount is 36,000. With this company you should definitely continue. It is the market leader in the private sector bank. Just like Bajaj Finance is the leader in the NBFC sector, which is the non-banking finance sector, this company is the leader in the banking finance sector in the private sector bank. And this company's profit are also increasing at a very healthy rate. Being such a big company, it is still growing its profit above 20%. However, we have not seen that performance in the share price. So there is a gap which is getting created in the earning growth and the share price growth. So right now I think it is a very good time to enter into this company and accumulate more share of this company, because sooner or later that gap between the earning growth and the share price growth is going to reduce. And when it reduces from this point onwards, we can get very good returns. Next company is Infi, which is Infosys. Quantity is 36, invested amount is 53,000. This also is a very good company from the IT sector. It is the second largest IT company in India, and it can also provide you very decent return in the period of 5 to 10 years. Its management is excellent, its business is excellent, and IT sector in the future also is only and only going to grow. Next company you have again is from the IT sector, which is KPIT Technologies. Quantity is 50, invested amount is 39,000. So you have kept two companies, which is good. One is a stable company, which is Infosys, and one is a medium-sized company which can give you very good growth. So you can continue with this company also. Next company is KPR Mill. Quantity is 33, invested amount is 17,000. In my view, it is an average company, but do track its quarterly results and yearly results. If you notice a continuous dip in the revenues, then you also might have to take a decision to exit from this company. Next company is Likita. Quantity is 87, investor amount is 20,000 rupees. And here you can see the business of this company. So this company is engaged in the business of pipeline laying by providing comprehensive erection, testing and commissioning of oil and gas pipelines, city gas distribution projects, and operation and maintenance services. And again, this is a microcap company with a market cap of only 900 crores. And now we are at the yearly numbers for this company, and let's keep an eye on the operating profit. So operating profit in March 2011 was 1, then it was 3 crore, then 4, 5, then again a dip, but again it increased to 6, then 13, 11, then 29, 30, 39, 61, 75 for the 12 trailing month. So from last 5 years, we can see that the profit of the company is continuously increasing. And from the period of March 20 to 22, the profit doubled, which is very good. And now also there is a good increase in the profit. If I look at the profit growth looks very good. 10 years 43, 5 year 43, 3 year 36, and for the 12 trailing month 39%. Sales growth also looks very good. Return on equity is also amazing, above 25%, and stock CAGR for last 1 year has been 50%. So this company, although it's a micro cap company, looks very good to me. I think you should definitely continue with this. If this company keeps growing in the same manner for the next 5 to 10 years, then this can also turn out to be a multi-bagger. But we don't have to forget that this is a micro cap, so the investment also should be very small, which according to your portfolio is correct. You have invested only 20,000 rupees in this company, so I think you should definitely continue with this. Next company is LT. Quantity is 25, investor amount is 54,000. This company is a blue chip company, but it's a very slow company. If you want, you can continue also. It's a stable company and comparatively a safe company, but it may not be able to provide you very good returns. So if I were you, I would have not gone with this company. Instead of that, I would have added this amount to other companies like SDFC, Bajaj Finance, or any other market leader. Next company is Mahindra Lifespace. So this company is from the real estate sector. Quantity is 200, investor amount is 78,000. So real estate sector is a sector which I would generally avoid, because this sector does not give very good returns to its shareholder. Instead of that, you should go with sectors which support the real estate sector, like piping segment, paint, adhesives, these kind of sectors that you can go with, because these sectors have created much more wealth than the actual real estate sector. And now I'm in the numbers for Mahindra Life Sciences, and you can see in the numbers itself, the profit growth has been in negative for 10 year, 5 year, 3 years, and sales growth also has been in negative. Return on equity is in the lower single digits. So this is a company that I will definitely avoid. Next company you have is Oberoi Realty, which is again from the real estate sector. Quantity is 24 and investor amount is 21,000. So for this also my comments will remain same. Realty sector I think you should avoid. Real estate sector, metal sectors, PSU companies, these are the things which in my opinion I think we should avoid, because they do not provide consistent return. You may stay invested in this company for 5 to 10 years, and if you look at the overall return, it may be even lesser than the FD. Next company is Pidilite. Quantity is 34, invested amount is 82,000. Now this is a good company. This is a company that we can have in our portfolio. Why? Because this is a market leader. This company has more than 70% market share in the sealant and adhesive sector. This company has created a kind of monopoly for itself on its own. It's not a monopoly which has been handed over by the government. It's a monopoly that this company has created by its product. So in my opinion, this is a good company. You can continue. Next company is PI Industry. Quantity is 10. Invested amount is 31,000. This company is from the agrochemical space, and this has also provided very good returns to its shareholder, and it is still growing at a very healthy rate. This also can give very good return in the coming 5 to 10 year also. This also is a company that we can keep in our portfolio because it is a growing company, and a growing company which is continuously growing its profit and sales. There are high probability that the share price will also grow, because ultimately the share price follows the earning growth, and these companies are giving very good earning growth. So you can continue with this also. Next company you have is Polycap. Quantity is 1. Investor amount is 2,500. So this is a company that you have recently invested in. I think I've discussed this already when we were discussing Phenolics cable. So Phenolics cable amount, if you want, you can move it to this company. It's a good company to have in the portfolio and keep it for long term, because the profit of this company is growing at a very healthy rate. And here you can see the profit growth of the company. Profit growth for 5 years has been 31, 3 year 21, and the last 12 trailing month it has been 46. Sales growth has been in double digits, upper double digits, 5 years 17, 3 years 15, and in the 12 trailing month 23. And return on equity is also close to 20. And stock price CAGR has also been very healthy till now. And this company will be completing 5 years in few months. So in the stock market, it is still new, and I think it has a lot of potential. It can continue to grow in the future also, and it is the market leader in its sector. Next company is Reliance. Quantity is 34. Invested amount is 80,000. This also is an average company in my opinion. If you want, you can continue. If you have conviction on this company, you can continue. But I think the real value unlocking in this company will happen once this company starts splitting its businesses. But for now, this company is good. It can give you average return in my opinion. Next company is from the chemical sector, which is SRF. Quantity is 32. Invested amount is 73,000. This also is a good company from the chemical space. This also is growing its profit at a very good rate. So the chances are there that this company can also give you very good return in the coming future also. Next company you have is Titan. Quantity is 34. Investor amount is 82,000. This also is a good company from the jewelry sector. You can continue with this. This company also in my opinion has a very good runway ahead, and in the period of next 5 to 10 years it can give you good returns. Next company is Trent. Again a Tata company. Quantity is 10. Invested amount is 13,000 rupees. This also is a okay company. If you want, you can continue. Next company is VBL. Quantity is 33. Invested amount is 38,000. This company is from the non-alcoholic beverages sector, and it has the biggest franchise of PepsiCo in the world. And this also has provided excellent return to its shareholder till now. And I think this can continue to do that because the profit of the company are still increasing at a very healthy rate. So this company, I think in my opinion, you should continue. And you mentioned that you want to be sensibly aggressive in your approach. So this is a company which is aggressive in nature. Why? Because it is growing its profit at a very good speed. So if you want, you can take risk in this company and allocate more capital to this company. So similar to VBL, if you want your portfolio to be a little more aggressive, then you can add more in Polycap also. So you have in total 23 companies in your portfolio, which in my opinion is still on a higher side. If you are able to bring it down to 15, then it will be a good number, and you'll be able to focus more on those 15 companies, and you'll be able to deploy more capital on those 15 companies. However, if I look at the companies in the portfolio, the companies are very good. You have mostly the market leaders. Some of the companies in my opinion were not very good, and I've already given my opinion on those. So if you want, you can also do your own research and then take action accordingly. Now coming on to your question related to your goal, which is 1 crore in the period of 10 years. So you have already invested 10 lakh rupees, and you mentioned that you will add 20 lakh more. So in the period of 3 years, your portfolio should be around 30 lakh in total invested value. And on that 30 lakh, I'm assuming you will get a return of, let's take a very low number, around 5 lakh rupees in the period of 3 years. So it makes it around 35 after 3 years. And then you have remaining 7 years to cover and to convert it into 1 crore. So then to convert 35 into 1 crore, you would need a CAGR return of around 18 to 19%. Which I think is doable. I don't think it's a very difficult task, because these companies which you have in your portfolio, these companies have provided better CAGR than 18% in the period of last 5 to 10 years. And if these companies keep on growing its profit at a rate of 18 to 20%, then you can also expect a CAGR return of close to that. So according to me, your goal for 1 crore at the age of 70, I think it is achievable with this portfolio, provided you take action based on the opinion I've given on various companies which may not support your goal of 18% CAGR. which are companies like Mahindra Life, Oberoi Realty, L&T. This brings us to the end of the video. Please remember, these were all my views. Please do your own research and study also before taking any buying and selling decision. And in case if you have any question, or in case you want me to make a video on any specific topic, you can mention it in the comment section also. So bye for now. We'll meet in the next video. Thank you.